major from the U.S. Army. She has an MBA in logistics and human resources. She is a professional financial advisor. She has 100% of the information. She is helping people change their financial family trees, and she is having a whole lot of fun doing it. I would like to introduce to everyone my coach, the great woman, Miss Tasha M. Dyer. Miss Dyer, are you on the line?
Yes, yes, I am. And thank you so very much, Trevino. I want to thank you so very much for hosting this evening's call. This is a Power Pack Tuesday, your BYOB Power Pack Tuesday. And ladies and gentlemen, the gentleman that you just heard that introduced this call is spearheading our BYOB movement in Columbus, Georgia. So we are definitely expanding this movement, educating families. So I just want to thank you so very much for taking the time out to host everyone this evening on a call. Now, ladies and gentlemen, what we've been discussing, and we've recently learned about candles, new candles, and how we can effectively trade and how that can enhance our skill set, how that has effectively traded. And we have people winning. We're winning. But what I wanted to do tonight is, because one of the things that we talked about is the fact that they removed the noise out of the market. The fact that the Hikinashi candles, when we discussed them and when we trained on them, we talked about how they removed the noise. Well, I also stressed that it's very imperative and it's very important that you understand what the noise is, because you do not want to make your trading decisions from those candles. What you want to do is you want to analyze charts, and you want to make sure that as you're trading, you understand the candles. And I want to emphasize tonight how important the Japanese candles are, because those are very important. We are learning strategies, and we are learning skill sets, and we are learning how to utilize the tools. But even in the application, see, we're winning. We have individuals that are catching pips, that are increasing their bank account. But when you stick around and you get on the talk with the finance doctor, one of the Bytwoodisms that he always talks about is understanding and knowing why you're doing what you're doing. So it's very, very important that while yet we're making money and we've positioned ourselves and we've put ourselves in a position of profit, it's so very important that we understand how we got there. Because if I can profit using the skill set, using the tools, imagine how much more and how much more my bank account can increase when I actually understand and I know exactly what I'm doing. After tonight, I can guarantee you, you will never look at a candle the same. You will never look at a candle the same when you analyze the market, because it is so very, very important that we understand why we do what we do and how we do it. So yes, continue to engage into the academy, continue to dive in, continue to utilize the tools, because that's what they're there for. But while you're using the tools, it's so important to understand why you do what we're doing. So I'm going to begin by sharing my screen with you all. And as I share my screen, one of the things, like I said, that we're going to begin talking about tonight are the candles. We're talking about the Japanese candles. Now, these are the candles that you log on to. These are the candles that you see when you log onto the market. And anytime, no matter what strategy you're looking at, no matter what I'm seeing, this is what you're looking at, are these candles. These are the default candles that pop up for the most part. Now, these are just the ones that say candles. They don't necessarily say Japanese candles, they just say candles. So what you really, really want to understand is that these red candles mean buy, and the green candles mean buy, and the red candles mean sell. See, you hear us talk about a bull and a bear market. See, bull, this is a bull candle, and this is a bear candle. Now, what the body of the candle indicates is that this is the open. So when the candle, regardless of the time frame, and I'm gonna talk about that in just a moment, but during that time frame that we're analyzing, this is when that candle opened. So this is when the market began to move at this point right here. And this is where it closed. So that is the body of the candle. That's what happened at the body of the candle. However, you have sellers and buyers. We talk about often, all you have to know is how to buy and how to sell in the market. You know when to enter. We buy the market and we sell the market, and that's how we profit, right? But we don't move the market. The banks, the financial institutions, all financial institutions, our government, those are the ones that move the market. And when they move the market, we profit off of what's happening. So we just have to know how to read that market. Now, right here is where we open. And when it closes higher is when we have a buy, we're in a bull market, we have a buy candle. So, but what happens is that the buyers and the sellers, you have buyers and sellers that they pull against each other. You have some want to buy, some want to sell. So at some point during this time frame, this is the lowest that it got. So when you look to the right, which you're not going to see here, but if I was to look all the way to the right on my MetaTrader 4, whatever platform that I'm on, you're going to see your pips. That's the price. So that's the lowest price that it got to at that moment. And this is the highest price. So when I open low and I close higher, I have a green candle, which means I have a bull, a buy. I mean, the buyers were in control. When I do it the opposite way, when I open higher and I close lower, that's the body of, that's the bulk, that's the body of my candle. But at some point, it was pushed all the way up, means the buyers were trying to push up and the sellers pushed low, but it didn't stay there. And that's how the wicks are formed. So that's why we have wicks on candles. So that's what's happening in that time frame for that movement. Now understand that the candles, we see them differently. So each one of these candles on the time frame, each one of these candles means something. So it's important to know the time frame that you're on. That they can either mean a 1 minute, a 5-minute chart. So when you hear someone say, oh, I'm on a 5-minute chart, or I'm on a 15-minute chart, or I'm on a 30-minute, the hour. So this is where they drop down to. Now you're not going to see 2 and 3 because it's not what's on our MetaTrader 4. We typically stick to the time frames that we can trade with on the platform. And the most common platform that we use is MetaTrader 4. So that's what we typically talk about. And that's where we're dropping down to. But understand, whatever time frame we're on, each one of these candles represent that time frame. Now, the candles themselves, we have what's called a bullish engulfing pattern. So what a bullish engulfing pattern is that if I have, and I see it says day 1, but that would mean, like, if I was to go back, if that would mean I'm on a daily chart. So understand that this applies to the candle no matter what chart you're on. So if I have a bullish candle and it's a smaller, remember, it opened high and it closed lower. But so if that's what transpired, but then I have a green candle that is my next candle that is larger than my red candle, that means that the bulls rejected down. So that means that the buyers took control. So the sellers attempted, but the buyers engulfed the red candle. So what does that mean to you? When you see this, that means that what you know is the market is turning. This is a reversal. This is a reversal. So that means that the market is turning. So it's going to go, it's more than likely the market is turning. So it's going to start going up because that next candle is stronger, which means that my buyers are stronger. And the same thing, I have a bearish engulfing pattern, which means you see my green candle, which is my bullish candle, which is I'm buying, right? So what happens is the red candle is larger. So that means that is they're rejecting that. So that means that that pattern is turning. So what that means is that we're going to sell. That means that we were in an up pattern. However, the sellers took control, they engulfed. And so that means you're going to see a market reversal. Now, what you see here are what's called hammer candles, right? The hammer candles. So what these hammer candles mean, it's a clear indication of a declining price. It's reversing, it's determining a bottom. So when you see the hammers, that means that it's a clear indication of a declining price reversing its direction. So that means that it's changing directions. And I'm definitely going to show you this on the chart, but this is also a bullish reversal pattern. So this is a confirmation that the price is being reversed as well. Then we have what's called our shooting star. And this appears at the end of a trend. So this is a bearish. So this appears at the end of a trend. So when you see a shooting star, you know that, and it can be either color, the same way with the hammer. The same way with the hammer. It doesn't matter the color because you're looking at the shape of the candle. You're looking at the shape, meaning, where's my mouse? Meaning that it looks just like a hammer. That's what it looks like. And then it has a long wick on it. So that's what you're looking for. So it's turning around. So just like what you call a shooting star, what this shooting star is at the bottom. So it's just flipped upside down. So when you see this, we know that we're going into a sell. We're going into a downtrend. We're headed into a bearish market. So we're headed into a downtrend. Now, when you see these are dojis. When you see a doji, it's just a clear indication of indecision in the market. So when it's at the top, it's called a dragonfly. And when it's at the bottom, it's called a gravestone doji. But it is strictly a clear indication that there is indecision in the market because you have the buyers and sellers going against each other. However, there was no body of the candle formed. So no body was formed. The morning star. The morning star is when you have 3 different candles. So I have my red candle, and then I have a smaller candle, and as you can see, this looks just like the one that we were just talking about. Looks like that shooting star, but you see it's in between, and then we have that green candle. So what happens is with this one is it's a reversal. So when you see this, know that I'm going into a reversal. I'm going into a reversal. And if you notice, they're not even. They're not even with each other. You see one is higher, but at the same time, it's turning around. So that's going into a bullish, that's bullish. So that market is turning around. These are reversal patterns. These are reversal candles. And then I have my evening star. The only difference with this is it's at the top. So I have my green candle. You know, I have my buy candle. Now, once again, this can be bearish or bullish. It can be either color. But the next candle, that third candle, is a red candle, means it's in a bearish, it's in a sell pattern. So when I see these candles, when I see it turn, that means I know that I'm going into a sell position. That means that it's actually turned around. So that's what that means, is that my pattern is reversing, my trend is changing. And then I have tweezers, right? My tweezers, I got a tweezer top and a tweezer bottom. Now, we've been on training before. What does this tweezers look like? The tweezers look like a teacup, right? It looks like the top of a teacup. You see how all of these play together and how all of these indicate movement of patterns and different things that we're already trading. And that's why I say you won't look at it the same. You will not see the candles on the charts the same, because when you start being able to identify and you start looking at actually what's happening and what's going on, you will be able to understand the movement of the market, and it will help you perfect your trading and take it to another level. So when I see the tweezers, it's literally flat across the top. They're the same. You know, there's no wick across the top. But I have a green candle, which is my bullish candle. I have my bearish candle, right? And what this means is we open and we close higher. However, we open and then we close lower. So it's a rejection, and it's strong because it rejected it twice. So that's why, like when we're trading the teacups, or when you see that pattern happen, you know for a fact I'm going in a downtrend. You know for a fact, because it rejected it twice. Now, when I turn around and I do it the opposite way, I have my red candle, and then I have my bullish candle, which is my green candle, and it rejected the lower price twice. So now I have a strong, it's strong in a buy. It's strong. It's the strong strength. So these are those patterns that you begin to look for to know that I'm going in a buy. So it changes the market. So before we go into how you actually apply it or how you do that, do I have any questions? Any questions, any comments about what you just saw? Because I'm going to take you to the next step where I show you how you see it and what you're looking for. But do we have any questions?
Yeah, I have a question regarding the tweezer tops and the tweezer bottoms. So when it's flat across the top, whether it's up or down, if it's on the top, that means it's rejecting a buy pattern, so it's going into a sell pattern. And if it's on the bottom, it's rejecting the sell pattern and going to a buy.
Correct.
Am I correct?
Correct.
So, as we've stated on numerous occasions, and particularly for our guests, everything about this market is cyclic. And once we understand the patterns, then that's going to allow all of us collectively to monetize the movement and become more precise when it comes to charting and making our entry points and exit points, so that this is also an opportunity to help us mitigate our risk, because we are able to identify the different type of candle patterns.
Absolutely. Absolutely. And you actually said it before I did, because that is exactly where I was going. You know, we focus on the skill set. You hear me say it often, that if you focus on the skill set, that the money is going to come. So this is part of focusing on the skill set. This is part of what helps you mitigate your risk. Understanding what you're doing, understanding what you're seeing, is going to perfect your trading. Because when you see these different things on the charts, and when you see these different patterns, even in the strategies that you're trading, because we learn the strategies and we understand them, but when you begin to apply these different things and you begin to apply this different knowledge, because the market repeats itself, it's nothing new under the sun. So when you actually see what the market is doing, and you actually see the patterns repeating itself, then you can begin to predict what's happening. Now, of course, nothing is 100%, but this is why it's risk mitigation and how you can actually control your outcome.
Hey, Tasha, this is Stacy. This applies to any strategy that you're using, right?
Absolutely, because these are the candles. So
Okay.
when we is because you're absolutely correct. Because when you look at the different strategies, no matter what strategy we lay on top of the candles, when we're in the tools, like for example on a web analyzer, how we can go in and we can apply any strategy that we want to trade. We're all looking at the same candles, we're all looking at the same market movement, but I can apply whatever strategy I want on top of it to trade that movement. But
And
these candles are the candles that you're going to see.
gotcha. And these are the original candles. They're not the Helsinki candles, right?
Correct. Correct. These are the traditional Japanese candles. These are the ones that these are the ones that have all the quote unquote noise. So when we did the Hikinashi candles, those are the ones that just focus strictly on the trend and remove all the things that we're talking about. So you're absolutely correct. These are just the ones that where you see everything that's happening. And if you recall, when I was saying that when we're trying to we're trying to analyze the charts and understand our trades, that we still wanted to use the traditional candles. And that's why, we're covering this today, because we want to make sure that we are understanding why we want to use the traditional candles.
Thank you.
Miss Tasha, this is Philippa. I just have a quick question for you. So in regards to the shooting star, that indicates that we're going back into a bearish movement. Is that correct? Or did I misunderstand that?
You said the shooting star?
Yeah.
Yes, the shooting star is a bearish reversal pattern.
Okay. Perfect. Thank you.
Oh, you're welcome. And bearish, yes, is sell. For our guest that's on the call, bearish means sell.
Can you explain that, Tasha? Because it doesn't look like it's a sell pattern. And that it looks like they're equally.
I'm gonna put it on the chart so you can see it. Okay. You're gonna see it in just a minute. And I definitely understand what you're saying, because when you do look at that, you think that it will go a different direction, but what you're seeing is the rejection. So gotcha. If I'm about to turn and go down, if I'm about to turn and go into a sell, that means that I was going up. So if I'm in a strong uptrend, that means I have fuller candles. So what happens is when I get to this candle, it rejects it. So I'm not able to get that full candle. Just like right here, that's why it can be green or it could be red, because what you see is the sellers and the buyers fighting against each other. So you see it's rejecting, it's being rejected. So then that next candle is going to turn around.
Gotcha.
So Ms. Tasha, just so I understand this clearly, it doesn't matter if it was in a strong downtrend or a strong buy trend. As long as we see that shooting star, we know that it's rejecting a buy and going back into a bearish.
A shooting star is more than likely going to come from an uptrend when you see this, because it's changing. It's a reversal pattern. So that means it's reversing what we already were doing. So if I'm reversing to go to a downtrend, if I'm reversing to turn around back in another direction, so if I'm reversing to go bearish, that means I was coming from an uptrend to go now into a downtrend.
Got you. Thank you.
Oh, you're welcome. So when you want to apply these, right? When you want to apply these, what you want to do is you want to understand the trend of the market, because we really are not wanting to trade against the trend. Remember, the trend is our friend. And then we want to understand the area of value, support and resistance, moving average, and the trend line, and then our entry triggers, which the what we just went over are entry triggers. So what I'm gonna do right now is I'm gonna pull off of here, and I'm going to I'm gonna show you how to do trend lines. I mean, the support and resistance, those support and resistance lines, before we take it to the next level. So let me pull that up. And I'm going to share this with you. It is changing. Okay, can you see the chart? Can you see the?
Yes.
Yeah.
Okay, thank you. Okay. So what I'm on is on the hour time frame. Let me get rid of these that's already on here. And this is very important when you're trying to identify what's going on. So, and you're trying to understand. So I'm gonna actually go up to the 4 hour. Get rid of these lines. Now, I'm just gonna bring it in so you can actually see. Now, and you don't want to put lines everywhere, right? We don't want to put lines all over the place, just everywhere. So we overdraw it to where you can't properly analyze it. But with your eye, with your naked eye, you can kind of begin to see where, and I'm going to highlight it and then I'm going to go into it a little bit, but you can begin to see where the patterns are for like the support and resistance lines in the market. You because you want to lay those lines across where we have the chart. I mean, where the candles where you see we have those resistance, which is where you see those lines come across. Now, one thing that I do that typically helps, and it helps identify it, and everybody has their own styles, but I'll turn it into a line chart. And what the line chart does is the line chart just simply plots closing prices, right? And so you don't see everything, but it will help you identify it will help you to identify those support and resistance lines. So this is how, when I draw my lines, I turn it into a line chart. It just makes it a lot clearer. And just so you can kind of see once again, is you see the difference? Now I don't see all of the movement. I don't see the wicks, because remember, this is strictly plots the closing prices. So I'm gonna turn it back to a line chart, and I'm going to draw my lines. And remember, I don't want to do too many. I just want to do a few. And when I draw those, I want as many touches as possible. So remember, everything that happens, it's already happened. Everything that's happening is already happened. So right now we're in April. You see that we're in April. And we always talk about the market repeats itself. But if you look left, where I'm seeing these support and resistance lines again, this is all the way back in January. So as you can see, the market repeats itself. So, and that's what's happening right now. Is I just want to draw these lines for you. Just put a few on here So you can understand what you're doing and to make sure you understand these support and resistance lines. And you want to be able to identify the trends that are in the market. And like I say, you want as many touches as possible. So when I go back and I turn it back into my candles, as you see, I have my support and resistance lines. And if you notice, it should be a lot clearer now to you that you see the market tends to bounce back and forth in those support and resistance lines. It tends to bounce back and forth within that area before it'll break through and go to another level. And as you can see, it will break through these lines, these support and resistance lines. That's what it'll do to get to the next one. And if you notice, I want to make sure you guys can see this. If you notice, when it breaks through, it kind of breaks through with some force. It doesn't just slightly push through, because it'll get there and it'll bounce off and it'll push off. It's not just forcing through there. So it will get to these support and resistance lines. And when it's on top, it is a resistance. And when it's on the bottom, it is support. And so you notice it'll get to these lines, but it'll bounce back and through there until it is able to push through there because of some movement or some things that's happening within the market. So I'm gonna go back to the slides to kind of show you, and then we'll come back. We'll come back to this. No, but wait, before we change, do I have any questions on how I drew those lines? Any questions? Any comments on those lines?
So this is Stacy again. So the lines are touching based on touch points across.
Correct. Exactly.
And you click on the line at the top up there to draw each line with support and resistance.
You said, now repeat that last part again. I'm sorry.
You click on the line at that line chart the line symbol, so you can put the
okay. Where did I change it at?
Well, you show it right at the top up there. You clicked on the line, right? Not to change the candle.
Correct.
But just the line. Draw the support and resistance lines.
Oh yes. And see, you can adjust it, because what you want is you want the most touches, right? So I want to make sure that I have the most touches, because that's where the actual support and resistance line is. So I got, 1, 2, and as I go over, I have the 3. It's kind of touching here. And as you notice, on each one is touching.
Gotcha.
And that's how you draw your support and resistance lines, and you can kind of see what's happening and what's going on in the market.
Gotcha.
And if you notice, it's definitely repeating itself. It is definitely repeating itself. And it comes back to those lines. I mean, I can take this back. Where are we at now? That was January. So we all the way in December now, and it's still within the same time frame, the same area, the same range. It went up a little bit, and it's coming back down within the same support and resistance lines. Market just continuously repeats itself.
And this is the 4-hour chart, right?
Yeah, I put it on the 4-hour chart so you can see it. But remember, whatever happens on the 4-hour chart, it happens on the 5-minute chart first. It's just that we're not gonna come analyze on the 5-minute chart, because you wanna analyze on the higher time frames before you break it down. Because look at all the movement that happens just within that time frame, within that 4 hours. So we be analyzing for days. So you wanna analyze higher, and then bring it back down. Gotcha. To when you trading lower. Okay.
Yep. Thank you.
Oh, you're welcome. So now let me change this back.
Tasha, I have a question. This is Lativa. When you're looking for the touches, um, you're not looking for the touches at the top of the wick. You're just looking for wherever it's touching within that trend across the board.
Right. For the support and resistance, it's not
Uh-huh.
necessarily the wick, because the wick is, if you look, right,
Okay.
that means they were trying to break through.
Okay.
They were pushing against the resistance, but it's resistance. So
Okay.
it was not able, this candle was not able to push through.
Okay.
And so it's testing the line. So when that wick pushes through there, it's
Mm-hmm.
testing the line, but it's being rejected.
Gotcha.
And so even when it comes down to the support line, it's
Mm-hmm.
testing the line, but it's being rejected.
Okay.
And before it broke through up here, it was doing the exact same thing on this side. And even with this one, it broke the support a little bit, came back. It
Mm-hmm.
broke the support a little bit, and it came back, and then it just pushed all the way up, and it broke through that resistance line. And then it made this resistance line the support line.
Okay. All right. Thank you.
You're welcome.
So as we're looking, the importance of establishing the support and resistance line is it's also going to allow us to maximize our trading potential to when we get to the place of where we're going to be able to trade out of the support of the resistance to capture the movement, whether it's an uptrend or a downtrend. But I think once your eye becomes more keen to looking at the different candles, then that's going to put all of us in an equally more effective maximizing our potential pip gain because of the multiple tools. And now our desire for each and every one of you, particularly I guess, is this is going to help us become even more effective with our entry points. And that's really the identification of the type of candles. That's ultimately what it's going to be able to lead to.
Absolutely. So, and this touches exactly on what you were just saying, Mr. Rogers, because what we just drew was a resistance line, a support and a resistance line. That's what we just drew, right? And then I'm glad we had a question on the shooting star, because this is the very first example that I have is the shooting star. So as you can see, a resistance line, and as you can tell that this was bouncing off of it. It was testing it before. We just talked about this, and I just showed you the example of how this bounces through there and it comes back and it tests that line again. But what happened? How do I know what's going to transpire? How do I know when it's a good time to enter this trade? So if I'm trading on the pivots strategy, if I'm trading different strategies, how do I know? Because the pivots is a very good strategy that uses these support and resistance lines that you see, because they're using pivot lines, and that's all pivots are support and resistance lines, right? So how do I know? Well, this is going to help you, because I see a shooting star right here. And this is one of those things called an entry trigger. So I understand where I'm at on the trend. So in this example, I'm in the downtrend. However, I can see I'm testing that resistance line. So you got a chance, and it's a chance that this one came up higher. It's going to come up again. It's testing that line. But then I see a shooting star. When I see the shooting star, that is my entry trigger. So that tells me that now I can enter this trade. Now I can enter it. See, this is where I mitigate my risk management. So everything that Mr. Rogers was saying was on point with what I'm sharing with you tonight, because this is where I mitigate my risk management. And now, because I see this shooting star, I know that this is an entry trigger, so I can enter this trade safely knowing that it will continue in a downtrend. And that's exactly what happened. And that's exactly what transpired right here. So it didn't come back up right there. It came into a nice downtrend before it did anything else. I had a nice downtrend that you entered and was able to gain a lot of pips. So I know we had a question about the shooting star. Now that you can actually see it on the chart, does this help you? Does this help make it clear, or you understand what the shooting star is and how to read it on the chart?
Yeah, I do. But over to the left, where right under resistance, and you see that little, I guess it looks like it's a hammer, the red. Yeah,
This
right.
one?
Yeah, right there. That would be classified as a shooting star because of the size of the candle. It's more of
No, see, both of these, if you look at the shooting star, let me go back. See the shooting star? It has nothing on the bottom, right? The low is where they were fighting.
Okay, I see.
Right?
Yeah, it's flat.
So now, right, correct. So now if I bring it back to the chart,
I see. I got
and
it.
it's just, and if it's anything, it's how I took the picture, because this was flat when I took the picture. So if you see anything, it's just because of the glare from how I took the picture. So over here, this is actually a wick.
I got you.
And this is a wick. And so, like I said, if you see anything right there, it's because of my glare when I took that picture.
Gotcha.
And so what we have here are the tweezer tops. So with the tweezer top, as you can see, that is doing the same thing. So, my mouse got stuck, sorry. But what you can see is the tweezer tops. So I have the resistance, but because it's the tweezer tops, this is giving me a strong sell. So I have my green, and then I have my red, but I have my tweezer tops. And so you just, the names, that just means the two wicks are on the two wicks are on the top, and then you'll have the two wicks on the bottom for the tweezer bottom. But it's just, you just get comfortable with identifying what these are on the chart. And then you can see when you have these two, what happens is it went into a strong downtrend. Now, this one is this one is a moving average. This is a 50 moving average. So this is one of those areas of value. So you had your support and resistance, you have your moving average. So you have those identifying the trend. So when you actually see these things, and so I'm actually in a downtrend. And when I'm in a downtrend, what do you notice? You notice these pullbacks, right? It goes down, it pulls back. It goes down, it pulls back. But what do I know? We are always told that I can enter. The trend is my friend. The trend is definitely my friend. But I can enter on a pullback. I can enter on when it does a pullback, but how do I know how far it's going to pull back? How do you see those things, right? So I could either have a trend line. This one is actually along the moving average line. But when I get there, I have my bearish engulfing candle. So now you see it on the chart. So you see my green candle. Then I have my larger red candle, which is engulfing my green candle. So that means the sellers got stronger. So because of that, now is a good time for me to enter on this trade. I can enter on this trend, and it pulls down, and I have a trend continuation in the sell position. And now we're going in an uptrend. So this is my 50 move. This is my moving average line once again. So But what do I see? I see a bullish engulfing candle. So I have my green candle, my buy candle that overtakes the red candle. So it's larger. And so basically when you look at this and you see it as it engulfs it, so it overtakes it, it overpowers it, it's a lot stronger. So when you see that, then you know that I'm going in an uptrend. I'm going in an up position. I'm buying the market. And then it pulls back a little bit. And guess what? When it does it again, now I know I can enter this trade. Now I know this is another area of opportunity for me to enter because I know that this trend is going to continue in an up position. When I see this, it's not going to continue down. It's not going to go down. It's going to go back up in an up position. Now here is my evening star, right? My evening star. So I'm in a downtrend, and this one happens to be a little different. So when it pulls back, it retraces some, and guess what happens? So I have my buy candle, and then I have my small candle, right? I have the little one, and then that third candle is a strong red candle. That's what that third candle is. So what that tells me that I'm bearish and I'm headed in a downtrend. So that trend continues. That this trend continues to go in a sell position. So I know that I can safely enter this trade. Once again, mitigating risk, safe entries. I know when I can enter. It's a reversal pattern, so I know that I can enter this trade. Now, what you see here is you have higher highs, you have higher lows into resistance. So one of the things that you want to see, and I'm going to take you back, and then I'm going to come back and show you. Just 1 second. I'm going to take you back to where we were just a second ago. And so while we were on this chart, what you want is a strong push, okay? When you see a strong push, that's what you want. When you see these strong pushes, you know that you're gonna go into the next trend. That's what you want. You want those strong pushes when you're breaking those support and resistance lines, okay? And I just wanted to show you what they look like. And I'm gonna switch back. I just wanted you to have a visual, because what you see here is, and I apologize for the clarity of the picture, but I'm not trying to get you to look at each individual candle. I'm just trying to get you to look at the actual trend. So what you see here is an uptrend, but it's not a strong push. It's not a strong push into that. So when that happens, understand that the market movers, the ones that are that move the market, the big picture, the banks, financial institutions, when it's taking its time and it's slowly moving up, so that means it gets caught on those higher time frames. That means that everyone gets a chance to notice it. So you want to make sure that you mitigate your risk, meaning that you really analyzing those stop losses and you're really analyzing those entries, because it's a strong possibility that when you see this, it's a great chance that you're gonna go higher. It's a great chance that it's gonna go higher because the sales are getting weaker. So it's a great chance that it's gonna go higher, but I say great chance because that gives, when you see it moving like this, you want to make sure your stop losses are tighter. You want to just make sure that you're mitigating, because now you have more players in the market, because it's not moving swiftly, it's taking its time. So when it takes its time like this, it's a great possibility that it's going to go up. It's a great possibility because those sales are getting weaker, but at the same time, it's also giving more people the opportunity to get into the market. So this is where you want to focus on your risk mitigation and making sure that you are taking proper precautions. And the same thing on the downtrend. Those buys are getting weaker. So it's not shooting down. It's not a strong push. It's a nice pullback. It's a nice low. I'm going, I'm pulling back, I'm selling, I'm pulling back. Yes, the buys are getting weaker. So it's a strong possibility that I'm going to keep going lower. It's a strong possibility. But even though it's a strong possibility, when you see movement like this, it also gives it gives more people the opportunity to see what's going on because it's taking its time, and it's going to give more people the opportunity to play into the market. So you definitely want to make sure that you're practicing proper risk mitigation, proper stop losses, proper, entry points. You want to make sure that you're not playing around with these support and resistance lines. In this case, a support line, because you want to make sure that you're looking at those market triggers, and you want to make sure you understand what's going on, because before it pushes through that support line. So we down to make sure you choose that, because possibility, you see what happens when it goes. So you want to make sure you understand, or just wait till it breaks through and then begin to trade again. And then when the market, it goes up, see, it was going up in a nice trend, but then it begins consolidating and it begins moving. As you begin to understand market structure, then you will notice, okay, this is forming a flag. But until we get to market structure, until you understand market structure, when you see something like this pushing against that resistance line, so it's pushing strong against that resistance line, but it's a lot of consolidation up at the top, understand it's going to break out. And what you see right here is it broke out. So there is about to be a breakout, because the market is respecting that support line, that resistance. I'm sorry, the support will be at the bottom when it does it at the bottom. But the market is respecting this resistance line, but it's not going to hold it for long, because it's continuing to push up. It's pushing up, which means that my sales are getting weaker. But look where I'm at. I'm pushing hard and strong against the resistance line. I'm pushing hard and strong against this resistance line, but at the same time, there isn't a lot of selling. There isn't a lot of selling going on to bring me back down into this area. So there's no selling going on to bring me in this area. So this resistance line is not going to be able to hold the market for long. It can't just hold it. And so since it can't just hold it, it's respecting this resistance line, it's respecting the market, but it's not enough sales in play. So what happened is it broke out. It just broke out. And that's what we saw on the slide as well. So with that being said, looking at the time, we're going to have to come back and probably on Thursday and actually look at some of this and put some on the market and look at some strategies. But before we transition this call, do we have any questions? Do we have any comments?
So I just want to make sure that everyone completely understands. I'm absolutely excited, and folks, as you can see, the value that's in your IML Academy. And as you become more in tune with our study hall and you've taken the time to dive into your IML Academy, a lot of the information that was shared this evening, of course, is housed in your basics, your technical analysis. Then as we are getting more understanding, some of this information can also be housed in the immediate as well, to get the understanding of the different type of candles. And there are a lot of things that we're going to be adding to our study hall to enhance your learning experience and teaching how to become more profitable. Once again, we're absolutely excited for the information that was disseminated this evening. Tremendously grateful. And folks, this is why we stay excited for you as we are moving toward our ultimate goal of teaching everyone that's in our sphere of influence how to become their own bank. And I'm sure, as Ms. Dyer said earlier, once you become more acclimated to understanding candles, you will never look at a candle the same. And I'm sure a lot of you are probably feeling even more excited about what you've already garnered from the IML Academy in this session this evening. This is why we stay persistent and consistent. And as we've always said, if you plug in, you will win. Over a period of time, and all of us are on different schedules of learning, but if you're consistent, stay committed to dive into your IML Academy and avail yourself to the information, we will get you over the finish line. We're going to put you in a position of profit. And with your help, our vision, we're going to document, we're going to impact 1 million households and financially educate those individuals by the year 2021, March the 28th. And it all starts with settings like this. So I'm sure that you're inspired, you're encouraged, that it's becoming more crystal clear. And once again, this is why we do what we do. We want everyone to extract the value of what IML Academy already has given us, the tools, and now we just want to make it practical and allow everyone to gain and take away from the table the amount of revenue that you decide to. And if you're consistent, you will get the results. With that being said, we're going to transition this evening. Once again, kudos to our coach and our mentor for this evening, Ms. Dyer. We thank you for being so freely and liberal with making sure that all of our business partners collectively have an opportunity to win and win big. And with that being said, folks, I'm going to once again get the opportunity to introduce to you this evening